Solidus Labs released a report today highlighting enforcement actions on the crypto industry and found that U.S. regulators broke records last year. Now, in the report, you note that the four main federal regulators with authority over crypto, so that's the SEC, CFTC, the Financial Crimes Enforcement Network, and the Office of Foreign Assets Control, announced 58 crypto-related enforcement actions combined. That's a 65% jump compared to 2021. Did that number surprise you? And what does it signal exactly?
It didn't surprise me. And let me first say, I've been in this industry for about 5+ years now. And every year, when we start summarizing the past year and looking forward to the next year, we always say that, this year was unprecedented in terms of regulation and enforcement, and that next year is going to be the biggest year yet. And to be honest with you, and it's good to validate it with numbers. And that's part of why, as a company that's working to make the industry safer, it's really important for us to monitor and analyze that. And so I'll say, the fact that the number has grown, does not surprise me. But it is really interesting to look into the details here. And I'll just share a few numbers beyond this, 65% growth overall. So, if in 2021 we saw 38 enforcement actions that are crypto specific in total in the US, this year 58. In addition to that, it's important to mention, that we're talking already about around 3.4 billion in fines and disgorgement fees since 2013. So, enforcement, is really starting to take a big toll. And we saw some of the biggest fines and settlements this year. We're seeing a lot of state activity. The crypto industry often, thinks when we think about state regulation, we immediately think about New York, Wyoming, some of those states that have very advanced or progressive approaches. But, what we found that, 16 states in 2022 issued their first crypto enforcement actions, and that the leader there is actually Texas overall, which since 2017 has enforced against 58 cases.
So you just mentioned this one, but one point that stood out to me in this report was that 24 state regulators broke crypto records last year. And you said that 16 announced their first crypto action. So does this mean that those scammers out there better watch out now that federal and a growing number of state regulators are cracking down?
100%. Any way you look at it, enforcement is increasing. It's increasing for two main reasons. A, we've seen a lot of malicious activity, and with some really big kind of high stake incidents this year, like Terra Luna, like FTX. That's a big part of why regulators are more proactive. And yes, I have no doubt that it will deter people as we see more of this. At the same time, it's also just a factor of regulators wrapping their mind around the space and starting to understand the problems. What's important to say here is that what's really interesting to me when I look at some of these enforcement actions is, for example, if we look agency by agency, the SEC generally has had the most enforcement actions against crypto firms historically. But what we're starting to see here are some really interesting cases that are really going to impact how the law sees crypto. So when it comes to this question of is crypto a security or not, that's obviously in the SEC's wheelhouse. We're seeing interesting cases like library versus, like the SEC versus library, where essentially for the first time, a court in New Hampshire actually argued that that particular crypto, LBRY, it's a protocol, is considered as security. If you're looking at the CFTC, we're seeing a very dramatic increase, 73% more enforcement actions than last year. And by the way, which also means that out of the entire CFTC enforcement actions, crypto and non-crypto, crypto is now 22% compared to 6% in 2021. So just to say that we're also seeing the attention of those regulators increasingly diverting towards crypto. But specifically with the CFTC, we're also seeing a couple of really unique cases. First of all, their lawsuit against Avraham Eisenberg, which was the perpetrator, allegedly, of the Mango Markets hack. That is a very unique instance of market manipulation enforcement because it really looks both on-chain and off-chain. It's very DeFi specific. And the last one I'll mention is, of course, CFTC versus UkiDAO, which is the first action against a DAO, a decentralized autonomous organization. So we're also seeing the fact that regulators better understand the space and are starting to look at very crypto-specific cases and apply existing regulation on top of them. I believe all of that should very much serve to deter and make scammers wary and ultimately gradually push them out of the space. And I know that the industry is very much collaborating and doing its best on its side to deal with those issues.
So expanding on that, the CFTC's crypto enforcement action accelerating by a whopping 73% last year compared to the year before was the fastest of any federal regulator. So that specifically jumped out to me, but what would you say are some of the key points from the report?
Right. So first of all, a big narrative in the industry when we talk about regulation is this question of CFTC versus SEC and kind of like the jurisdictional, I wouldn't say confrontation, but dilemma there. Well, obviously, I can't speak for them, but you are seeing that both agencies are staking a lot of ground in this space. The SEC is naturally very focused on securities. The CFTC on commodities, and some of this question is what is what. I wouldn't doubt that my interpretation is to some degree the CFTC, yes, is ramping up because it's clear that there's a problem. It's clear that there's market manipulation. It's clear that users and investors are being affected. And B, also, yes, to stake ground in certain parts. Historically, for example, there are a lot of questions around existing regulation, but generally speaking, the CFTC, according to an analysis by former CFTC Commissioner Don Stump, already has authority, perhaps not to regulate spot crypto markets, but to enforce against manipulation in spot crypto markets. And you're seeing the CFTC starting to really utilize this responsibility and take actions. And again, the Mango Markets case against Avram Eisenberg is particularly interesting because it's a very crypto native cross on and off chain, meaning it happens both in the decentralized world simultaneously with centralized exchanges. So again, a very crypto unique case, and you're seeing the CFTC enforcing against that. So it shows the CFTC intends to be more involved. And to some degree, they're both accelerating as part of this question of where is jurisdiction exactly going to fall.
For more than a year, we have seen the SEC embrace regulation by enforcement, since right now the digital asset space is not really regulated. So do you think that's the right approach, or do you think there's a better way?
I think there's no one who would argue that regulation by enforcement is ideal, not even the regulators themselves. I think that generally there's consensus in the industry and among regulators and legislators that ideally regulation should not be by enforcement, but rather through the opposite, which is very clear specific rules that are easy to abide by. However, it takes a lot of time to develop these kinds of rules. And I have to tell you something. I mean, a lot of people might disagree with me, but I actually think that regulation in crypto is moving very fast. If you look at how it moved in certain other, historically, you're already seeing regulators who understand, kind of the nuances and crevices of things like on and off chain market manipulation, and we'll see that regulation coming. But even though it's not ideal, the last year in crypto and the amount of people who were hurt was also very much not ideal. And it is the responsibility of regulators to do what they can to apply existing rules. I think, to your question, it's not ideal, regulation by enforcement. It's a natural part of the evolution of regulation. And at the end of the day, it's also needed at the moment, as you implied, to deter bad actors.
Can you take us through some of the other enforcement actions that stood out to you in your new report, specifically those imposed by the Office of Foreign Assets Control?
OFAC specifically is the office that is responsible for issuing and enforcing sanctions. That is, when there is a foreign entity or even potentially a non-foreign entity that for whatever reason the United States decided needs to be sanctioned against in one way or another, essentially, basically detached from the global financial system. That's really what sanctions do. Then OFAC will get involved. Obviously, this was a big year. First of all, because there was, sanctions became a really big deal in relation to Ukraine. When sanctions were placed over Russia, and they're generally an important tool the U.S. uses in its foreign policy. But also OFAC, perhaps took one of its most dramatic actions in crypto this year by sanctioning Tornado Cash, essentially to try and put it out of business. Tornado Cash, for those who might not recognize the name, was one of the most popular mixing services. So essentially, you could transfer your money in crypto into it, and when it would come out, it would be very hard to associate who put that money in, which is of course a very useful tool for anyone who's trying to make the money trail disappear. those are oftentimes criminals, obviously not always, but oftentimes criminals or people who made illicit funds and are trying to launder them. That was very dramatic for the industry because it touched on this question of, can you even regulate or enforce against a decentralized service? And again, Tornado was decentralized to a degree, but the bottom line there is that technically anyone could copy that code and just create another exchange. And the question is whether the liquidity will come. That was a really big debate in the industry this year. So OFAC was actually very central. It's also important to say that beyond just Tornado Cash, which got most of the headlines, we're seeing a 68% increase in total OFAC enforcement action. So from 5 in 2021 to 8 in 2022. And here as well, we expect this might continue to grow.
What would you say is the key takeaway from this report?
So look, obviously there's a bunch, and I highly recommend anyone who cares about building a safe and regulated crypto industry, which is most of our clients and partners, and of course, many just users and investors out there, to properly read it. It's easy to read, and I think would be very helpful as you try to decide where to do your crypto business, where to start crypto business, how to get involved. But at the highest level, look, we're seeing a consistent increase that's quite dramatic in enforcement actions over the past 5 years. And we're seeing that it takes place across the board. We often hear about the big headlines, incidents like FTX, incidents like Tornado Cash, but it's actually very meticulous work happening in a lot of places at once where regulators are working using crypto native technology to try and root out problematic actors. It's important for me to say to anyone in the crypto industry, a lot of these actions are retroactive, meaning you cannot, from a regulatory perspective, you cannot ask for permission rather than forgiveness. You cannot ask for forgiveness rather than permission. Some of these enforcement actions go back to 2015, 2017, but only took place now. Regulators are showing that if someone is acting maliciously in the space, if someone is not being responsible regarding fairness and the safety of users, that they will go against them, even if it's a very crypto-specific form of manipulation, like Mango Markets, even if it's something that happened a long time ago, even if it's abroad. And generally, so the bottom line for the crypto industry is we need to work with regulators. At the end of the day, this helps make the industry safer. But also, we need to keep on calling for regulatory clarity because that, as I mentioned, regulation by enforcement is not ideal. It's a necessary part of the evolution. The question is, how do we work together to make the industry safer? And I know our clients and so many people in the industry are deeply committed to it. Yes, regulation is not coming anymore. It's 100% here, and it's 100% going to get more intense. So be very thoughtful about risk monitoring and compliance.